What is up, y'all? My name is Josh, and I'm an active options trader. Welcome to my YouTube channel where I provide fully transparent trade breakdowns, weekly watch lists, and educational content in order to teach traders how to find their edge in the market. Especially in this market, if you are struggling with finding an edge and you find yourself either buying dips when they're actually bear flags or shorting bear flags, but they actually are V-shaped recoveries, this video is for you because I will be teaching you a very simple method to identify and trade bear flags that will help reduce your risk profile and increase your risk to reward ratio on trades, especially in this choppy market context. Not even choppy, we're in a downtrend right now. We are in a corrective phase on a shorter time frame after a very strong run up in both SPY and the NASDAQ. And so I thought that making this video would be, very timely and hopefully helpful for some of you who need a strategy to manage your short trades so you're not caught without taking profits at the right time, not caught without a stop loss, not caught without a strategy. And so I'm hoping that this very quick, easy, clean checklist, this method that I'm going to share with you, what is often referred to as the retest, what is it? What is the, sorry, excuse me. It's the breakout retest bounce, BRB. So the reason it's called BRB, as you can see right here, is that this is in a bullish trading formation where price will break through a resistance, it'll retest that same resistance, and then it'll bounce using that previous resistance as now support. Now, if you're trading bear flags, you're going to be using what I will be referring to as the breakdown retest rejection method, the BRR method. And this BRR method has, in essence, four main points, four main checklists that you're going to want to check off the box for every trade that you make when you think you are trading bear flags. And we're going to go through this checklist, which will also help identify bear flags as well. So let's just move on to this actual checklist. So the first thing we're wanting to look for in this checklist, and we're going to be referring to, our case study will be the NASDAQ from the last 2 weeks, because we have a very defined downtrend in the NASDAQ. Especially if you look at this 5-minute chart, you can see that we are making lower lows and our highs and lower highs on the 5-minute chart. And whereas previously we were making higher highs and higher lows, which is the structure of an uptrend. So once we make a lower low and a lower high, that is basically the essence of what a downtrend is. So when you are aware that you're in a downtrend, we have broken an uptrend, we have broken below a significant level, what you're going to want to first look for, and we're going to look at a specific day here. We're going to look at September 4th. Let's turn to September 4th on our chart here. Here it is. We're going to turn to September 4th. The first thing that you want to do when trading bear flags is you want to have a trigger. And what I mean by a trigger is you want to have something that alerts you to the fact that, hey, this might be a bear flag. It's not a trigger as in like you're pulling the trigger on the trade. It's an alert. Let's call it an alert. And so for me, the alert that I use is the moving averages, especially the 200-day moving average, which on my chart, the 200-day moving average is this gray line. The 200-day moving average is the last line of defense, or it's the slowest moving average, and so it provides the most information about longer dated trends on the daily and on whatever time frame you're on. And so what I like to do is, if price opens below or opens above, whichever, if price then turns down and crosses over or keeps below the 200-day moving average and then moves below all other moving averages, that for me is my alert. So let's look at September 4th here. We have an opening candle above the moving averages, all of them, and we stall a bit here. And as a trader, you're going to want to not short right away. Even if you have a strong resistance up in this 289 level, you're going to want to wait until it crosses over the moving averages and a downward trend is confirmed. Because for me, my style is momentum trading. You're going to want to trade in the direction of where the momentum is going. And when you're trading up here, you're not a momentum trader. You're simply trading against the level, but you have no price action to confirm to enter short. And so when the price moves below the 200 moving averages and all other moving averages and below the opening candle, this is key, it moves below the opening candle, and then you have what is I call a sort of trigger or an alert to be able to alert you to the fact that, hey, this might be a downtrendy day. We need to be looking at this specific BRR setup that I'm talking about here. So step number 1, moving below moving averages, especially the 200-day moving average, and below the opening candle, especially. All right, so we have this first moving below moving average checked on September 4th. Next, we're going to look for the break of a significant level. And the way that you're going to mark these levels is you can watch a lot of other videos on how to mark out levels, but a very simple way that I do it, and the most effective way, I believe, is simply just marking out the tops of uptrends that were retested as well. And you can't really see it on the hourly chart, actually, maybe the 4-hour chart here. So here you can see the uptrend was tested here, price was rejected, it was tested again, and we have another rejection, and then it's tested up here, and we finally push over. So you know that this level this price right here, this price point is a level of interest, so you create a red line. Same thing here, tested, and breakout, and then back test. So you have the breakout, retest, bounce method, which is a bullish formation, and you would get long on this retest, the retest during the bounce, after the bounce is confirmed. So on the opposite, you're just basically drawing these lines and you're looking for points of interest. I have a couple other methods that I use to also identify points of interest, which I will cover in another video. But whichever level you have, you want to make sure that it's a significant level. And once price confirms below that level, which means price pushes below that level, then you have your second trigger, your second alert. You say, okay, the sellers are in control right now. So after we have so check that one off, significant break of a level. For me on the 4th, my significant level, the one that I was looking to break, and some days, you know, if you're day trading, your significant level that you can break is potentially the low of day from the previous day or 2 days before, because you can have, for example, an inside day where the price from the day before had stayed within the bar of the previous candle, and you are simply wanting to look to see if the range is broken below. So does price break below? So for me, the price that I'm looking for is 283. Will price continue lower below 283? And we get that in the morning around 9:44. Price confirms below, and then, so that's check 2. The third check you're going to want to look for is a back test of the level and a rejection. And so right here we get a back test of my line, spot on actually, and we reject. We have a red rejection candle right there. That's the red rejection candle. It is on this candle. It is on this candle that you will want to enter your short. And immediately when you enter your short, you're going to want to ask yourself a couple questions. Aside from position sizing and whatnot, you're going to want to ask yourself, okay, where's my stop loss and where's my price target? And potentially a third question, is the risk to reward worth it? But since we're just trading bear flags, we're not going to go over bear flags. We're not going to go over risk to reward right now. So for me, my price target is the lower level that I have marked out from a bigger time frame. So we can mark it out from a 5-minute time frame, an hourly time frame, a 4-hour time frame, a 1-day time frame, etc. In my experience, the hourly and the 4-hour time frames are the best time frames for marking out particularly good levels. And so for me, my level that I'm looking for is 275. And so you can see I enter on this 280, around 282.5, and my price target is 275, which is in essence a 7-point short. My stop loss is not only just this 200 moving average, which actually I will use this 200 moving average, the retrace back to the 200 moving average, as a potential add target depending on the price structure. But my stop loss is the first candle, the high of the first candle. So if price moves back above the high of the first candle, and again, you have to be careful because you have to be aware of your risk to reward. So let's say we're trading down here and this is a significant level for you. We backtest this and we're shorting to this red line. This is not a good short because you're basically shorting 3 points and your stop loss is almost 6-7 points. So the risk to reward is not there. But that's just like a really quick and dirty way of explaining to it. So you have to move your stop loss up to the previous retest and support, which would be 283 on this if you were entering here. But that's just an aside. So you're going to enter the trade on the back test of the level and then the rejection. So that's a very simple method to decrease the amount of variance in your trades, because let's say you enter up here before price actually confirms below your support, there is a very high likelihood that price will bounce off of the support that you had marked and not move below it. I would say that 9 times out of 10, price does not break the support that you had actually placed before, that you're expecting it to move below in order to trigger your trade. And if you're entering your trade before it's actually triggered, then you have a higher likelihood of getting stopped out, of getting chopped around, of having to, add where you don't want to add, and all these different factors that contribute to a losing trade. And so you might miss 3, 4, 5 points of a trade, but your job is not to capture the entire move your job is not to capture the entire move. Your job is to capture moves that you can actually predict and actually profit off of as a trader. And so the moves that I can predict are these breakdown, retest, and rejection moves that I'm referring to right now. This is just one of the strategies that I use, but this is a very basic and important one that I think everyone can benefit from. And so if you're doing these breakdown, retest, rejection, you're actually able to capture a decent sized short with a lot less risk profile than you would if you were just blindly buying at the top or blindly buying at a perceived top, for example. This method, I believe, is the best method for shorting in downtrends if you're new to shorting, if you're new to bear flags, etc. And using that first candle as your stop loss is extremely important. If you don't have if you're later in the day and you're far below your moving average, just pick the last breakdown level, and use that as your stop loss as well. That's a lot of information. We're gonna just summarize really fast. We're gonna look for a move below moving averages, right? Then we're gonna look for a significant break of a level. Then we're gonna look for a back test of that level and a rejection. And then we're gonna enter on that rejection. And our exit point is that lower level that we have marked. And this is the fourth and final step of a well-executed trade. Where is your exit? Well, your exit is already pre-marked. So for me, my exit was 276-ish. And what I'm going to do is when I reach 276, I'm going to start scaling out of my shorts as we approach this target, because I want to be capturing the move as it's going down, especially if you're trading options, because any type of strong rejection of that move will significantly deflate your option prices if you're trading these 30-minute, 1-hour moves. So your price can move from 150% win all the way to a 50% win. And so what I want to be doing is scaling out as we approach this 276 level, and then keeping one runner keeping one runner just in case we get a little bit of a flush below my level, and then exiting on that flush. And so I would keep scaling back as we reach 276 and then exit on this candle right here. Not being greedy, not trying to capture some insane move that 99 times out of 100 won't happen, but instead just taking what the market gives me. So that's a very simple method that I think in this particular market where there's a lot of uncertainty, many new, even intermediate level traders can really gain some really well executed strategies, or gain some strategies that lend itself toward good execution once you begin to see these. The key is drawing your levels and testing your levels, back testing your levels, practicing drawing levels, and then especially trusting your levels. You really, really, really need to start trusting your levels. I still have a hard time trusting my levels. And by trusting my levels, I mean being patient with the trade. Stay home, stay in the trade. My coach used to say to me, Josh, let the play develop. Let the play develop. And so we're going to let our play develop and then profit off of it. And that's the plan. And if you always trust your levels like that, you will significantly decrease your risk profile and increase your percent gains. That's a very simple strategy. There are a few other methods, a little tips and tricks that I believe could be useful, but for the sake of this video, I will add an additional video later on for maybe like advanced tips and tricks for trading bear flags. But this is just a simple BRR strategy in order to trade bear flags that I believe will be able to benefit you. And if you have any questions, please leave them in the comment section. You can watch me day trade these live on the live stream, which I was doing this last week, actually day trading those bear flags. And I didn't have the opportunity to explain what I was doing on the live stream. I probably should have, so I wanted to create this video. So if you have any questions, comments, suggestions, please write them in the comments. I'm happy to respond. You can @ me on Twitter @WatchJoshTrade. You can follow my plays there. And if you have more video suggestions, please let me know in the comments as well. Please be sure to like and subscribe if you enjoy my content, and if you want to see me keep doing these more. Hit the alert notification to see me go live, and follow me on Twitter as well. All right, y'all. That's all I got for today for you. Have a good luck trading the market this week. Keep your risk profile lower and lower. That's a sign of a good trader. Peace out, y'all. Have a good one.